Morning, everyone. Looking at the US stock markets, the Dow has again recovered from the previous low of 21,750 points. Since then, the Dow has continued to climb higher and recently made a good breakout above the 25,000 psychological level on last Friday. With the breakout above the 25,000 psychological level, we could expect further upside for the Dow to trend back towards the 26,000 or even back towards the 26,250 points. In the meantime, the 24,250 points will serve as the immediate support level for now. The gains over the last Friday was underpinned by the stronger than expected jobs data on the US, coupled with the positive progress on the trade talks between the US and also China. Should the upcoming talks result come out positively, then we could expect or could both countries strike a deal on the trade talks, then we could expect the upside on the US stock market to trend back towards the 26,000 psychological level. Similarly, on the S&P 500, we are seeing a very strong recovery from the 2350. Since then, the S&P 500 has been hovering between the 2625 towards the 2680 level. Since then, we are seeing a good breakout above the 2680 as the S&P 500 rose above the 2700. And on last Friday, we are seeing a follow-through by interest beyond the 2700 as well. With the breakout above the 2700, we could expect further upside for the S&P 500 to trend back towards the 2800. In the meantime, the 2620 will serve as the immediate support level for now. Okay, some of this on the crude prices. The crude prices has again recovered from the 42.50. Since then, we are seeing a consolidation between the 50 towards the 53.54 US dollar per mark. But on last Friday, we are seeing a bullish candle was being formed as the crude prices has managed to break out above its consolidation band in the period of January. With the breakout above the 54, we could expect further upside for the crude prices to trend back towards the 57.50 or even towards the 60 US dollar per barrel mark. The strong upside on the crude prices on last Friday was underpinned by the larger than expected OPEC's production cut. Initially, the OPEC and its allies has come up with a targeted production cut, but Saudi Arabia has cut more than expected. So this could elevate the oversupply glut on the crude oil market. Okay, back home, the FMKLCI has earlier been traded on a sideways manner between the 1665 towards the 1700 psychological level. We did see the FMKLCI attempts to, we did see some of the retesting above the 1700, but the next day we did not see any follow-through buying interest, and instead we did see the pullback again on the FMKLCI. So on the local bourse right now, tracking the gains in the Wall Street overnight coupled with the higher crude oil prices, we could expect some of the mild recovery, but gains will likely to be limited due to the half-day trading and also the Chinese New Year period. So for now, we might see some of the upsides, but upsides will be just limited towards the 1700 level on the FMKLCI, while the FMKLCI will likely to just trade on a range bound between the 1665 towards the 1700 level over the longer term period. Until we can see a firm breakout and the follow-through by interest beyond the 1700, only we can confirm for further upside on the FMKLCI. On the lower liners wise, we are seeing some of the similar pattern. We did see a recovery above the 10,900 points towards the previous peak of 12,200 or 300 points level or the EMA 60 level. Since then, we are seeing it just a sideways manner on the lower liners as well. For now, we might expect some of the some of the further sideways pattern being formed on the advanced market index until we can see a firm breakout above the 12,300 points. Only we can confirm for further upside on the lower liners. On stocks wise, firstly, we can watch out for Aeon. Aeon has been on the pullback phase, on a downtrend phase towards the recent low of around the 139 cents level, but during this period of time, we are seeing some of the bullish divergence signal as price has been forming the low formation but the MACD indicator has been forming the higher low formation. With the bullish divergence formation being formed, we are seeing some of the recovery pattern on the AON as price recovered and made a good breakout above the 1 ringgit and 54 cents level on last Thursday, 55 cents level on last Thursday, accompanied by some of the very high volumes being traded. For now, let's monitor to see if there's any follow-through by interest beyond the 155. Should price breach above the 155, we might expect further technical rebound towards the 165 or even towards the 1 ringgit and 70 cents level. Stop loss will be located below the 1 ringgit and 46 cents level on our AON. Things appears to be slightly positive right now, as you can see that the MACD histogram has really turned green over the past 2 days after the price has breached above the EMA 20 level, and the follow-through by interest was noted on last Thursday. The RSI has also been maintaining its position above the 50 level over the past 2 to 3 trading weeks. On our post-Malaysia, price is traded on a similar manner. We are seeing a technical rebound on post-Malaysia after a very sharp selling pressure towards the 155 level, accompanied by some of the very, and we did not see any follow-through selling pressure. Instead, price continues to creep higher over the past 1.5 months trading period. On our post-Malaysia right now, we are taking this as a short-term breakout, the pullback just towards the EMA 20, and the potential continuation pattern as price managed to form the bullish candle on last Thursday, accompanied by some of the improvement in volumes being traded. The MACD histogram has really turned green. The RSI continues to maintain its position above the 50 level. For now, we could expect further upside for post-Malaysia to trend back towards the previous peak, which is around the 2 ringgit and 6 cents level. So this should price continues to trend higher, this could be the breakout pullback and the continuation pattern towards the 206. While should price breach above the 206 level, further upside will be seen for post-Malaysia to trend back towards the 2 ringgit and 26 cents level. Stop loss on post-Malaysia will be located below the 1 ringgit and 86 cents level. On Burma's auto wise, price has also recovered from the recent low of around the 1 ringgit and 80 cents level. Since then, we are seeing a price continues to be a creep higher, forming the higher high and also the higher low formation as price hit the recent peak of around the 2 ringgit and 25 cents. The 2 ringgit and 25 cents is a very strong resistance, as earlier we did see price rejected the 225 once, twice, and the third time towards the end of last month. Before staging a pullback, but on last Thursday, we are seeing a bullish harami candle was being formed on Burma's auto, accompanied by some of the improvement in volumes being traded. For now, let's monitor for the breakout above the 225 level. Should price breach above the 225, we could expect price to head back towards the first target price 240 or even towards the 247. Stop loss below the 2 cents level on Burma's auto. On IGM right now, price has been recovered from the recent low of around the 1 ringgit and 39 cents level. Since then, price has been hovering just towards the 1 ringgit and 82 cents before traded on sideways manner. But recently, we are seeing some of the good breakout pullback and continuation pattern was being formed on IGM as price formed the flag formation on breakout on last Friday, accompanied by some of the rising volumes being traded over the past couple of days. With the flag formation record above the 1 ringgit and 82 cents level, let's monitor to see if there's any follow-through by interest beyond the 185. Should price breach above the 1 ringgit 85 cents on IGM, we could expect price to trend back towards the 195 or even towards the 2 ringgit psychological level. Stop loss below the 1 ringgit and 70 cents on IGM. Price is still on a downtrend right now. Any recovery will be just taken as a technical rebound play. Last company for the day will be JCY. JCY is also still in a downtrend phase, so any recovery from now will be just taken as a technical rebound. After the violation below the 24 cents, price continues to slide lower towards the 15.5 cents level before staging a rebound. Price recently recovered just towards near the EMA 60, which is around the 20.5 cents level, before traded on a sideways manner towards the 17.5 cents. But on last Thursday, We are seeing a good breakout above the 19 cents level on JCY, accompanied by some of the improvement in volumes being traded. So for now, we could expect price to head back towards the 20.5 cents. That will be the intraday target. Should price breach above the 20.5 cents, we could expect price to head back towards the 24 cents level on JCY, while your stop loss point will be located below the 17.5 cents level. If you have any questions, you can put in the chat box and I'll reply you shortly. There's two questions here. Firstly, on AirAsia and Astro. AirAsia has again recovered, forming the hammer candle on top of the 2.30 level towards the 3.17. Since then, price has been traded on a sideways manner. For now, on AirAsia, if you adjust it to for the dividend, because it has recently announced a special dividend, it's actually on a very strong recovery trend, forming the higher high and also the higher low formation on AirAsia. So for AirAsia right now, we could expect further upside on Asia. Should price breach above the 317, we could expect further upside for Asia to trend back towards the 333 or even towards the 355 level. Stop loss below the 298 on Asia. Things appears to be still very positive, so we can still hold on if you're holding on to Asia. But if you intend to trade on Asia, let's monitor for the breakout above the 317 only to accumulate on the company. On Astro right now, our price is also on a very strong bullish formation as price hit the recent intraday low of 1.05 cents, accompanied by some of the high volumes. We did not see any follow-through selling pressure beyond that. Instead, price continues to form the higher high and also the higher low formation. On Astro right now, price has been traded on a sideways manner between the 160 towards the 170 level over the past week. For now, let's monitor for the breakout above the 170. Should price breach above the 170, price might head towards the 182 or even towards the 196. Stop loss below the 1.60 ringgit level. I think recently there's a news from the government saying that they are looking to ban on the those privately owned box, those box that can uh, show different channels or group different channels together and they sell it in one package, like in a IPTV box. So I think the government is looking to ban on that, and if that were to materialize, then that could be on benefit on Astro, because because by then Astro could be the sole or the market share on the Astro will likely to increase if that ban were to materialize. If there's no further question today, then we'll end the morning briefing. Thank you.